Okay, great. We go. So thank you very much. Thanks for your time. We're here to talk about B2B marketing. We're speaking to CMOs and leaders of B2B marketing. I'm going to go through a few slides. I want to share a few thoughts. This is an introduction to the process. This is one of a number of webinars, as you can see here, 6. We're going to go into real detail about this process. So the idea is this is for people who need to create this process in their businesses, and they are running B2B tech businesses generally, or B2B service businesses. So I'll go through a little bit about us very briefly. The team are very experienced. We've got people from lots of different experiences, not just strategy. We've got investment people, we've got CEO experienced people, we've got branding and growth execution people. So Elysian Fields is a collection of experts from with lots of different success behind them, and we generally work with technology businesses in B2B. We do some B2C, but that's a slightly different process. This we're talking to you about is B2B. We have experience of investment, and we have experience of the commercial elements of growing businesses. So this is not just a marketing activity. What we're going to share with you today is an introduction to a process that we follow all the time. So the principles we follow are all about capturing insights. The principles are all based on gathering those insights, using those insights, and the process of transforming those insights into something useful and valuable and distinct to help position a business in market. We're going to talk about the structured approach that gets you to that messaging and that positioning. We're going to share the fact that actually you need to cut through with fame and emotion. B2B too often stands for boring to boring. You know, you can't bore people into buying, and we're going to talk about why. And then we're going to talk about the longevity and the consistency of that activity, how you need to produce campaigns and marketing that have consistent help for buyers, make the buying really simple for them, and help educate them. And we're going to talk about testing a little bit. Most of that activity in the later stage of this, the list here, the interactions over months and the tests will be covered off in more detail in the growth machine phases of our webinar series. We're also going to go into a lot of detail about how to find fame and emotion when creating strategies. For now, I'll be giving you an overview of the process, okay? Now, the big problem that we get most of the time is that leaders, founders, CMOs of businesses that are growing fast or have been built off sales, a sales culture, generally think the marketing doesn't work. They've got lots of really bad experience and they've wasted lots of money. What we see is that people using tactics to try to solve the following common challenges, and these might be challenges that you're familiar with. So frustration, people are feeling though they're better than incumbents, but the incumbents keep on being sold or being bought. They want to stand out. They want to do something more efficient. At the moment, marketing has kind of been all over the place. And they might have some promises. There may be the Series A and they're talking to a venture capital company that has invested. It might be a Series B or C and they're looking to take more investment, or they've just closed some investment and they're wanting to stick to promises that they've made. Either way, these promises around growth are problematic, and businesses struggle to execute on the marketing in order to deliver the growth they need. Now, what we tend to find is that only insights and positioning will help these problems. Tactics won't. So most businesses have come to us with a whole array of tactics that have been used for a long period of time in different versions, and some stuff really works. You know, events really work for them to drive leads, or they do content and they find little pockets of stuff that work, but they can't scale it. And what we tend to find is tactics don't solve these problems. They don't help you stand out, and they don't help you build a sustainable way of delivering sales. What we tend to find is that these three things do. So you need positioning, which creates clarity, energy, and focus among teams. We're talking about alignment of teams and a new energy that comes from standing for something in the market. Secondly, you have a go-to-market strategy that is actually very interesting. It should be creative. It should be fun. It should get people's attention, and it should use psychology in a clever way. And you need a consistent delivery method, and this is hard to create. We're have first-hand experience of how hard this is. So we're working really hard at building systems that can deliver great messaging through the funnel to each persona in a relatively automated way. And so a system for delivering the marketing into the market for customers to see is critical. So we're going to go through these elements. What do? Well, we help businesses create what we call an unfair advantage, or a marketing unfair advantage. Obviously, the idea of an unfair advantage is pretty standard. Everybody's seeking something that gives them an advantage. What we have generally found is that most businesses do not create a marketing unfair advantage. They do not go to an investment committee of a venture capital fund or a private equity potential investor and say, we have a systemized approach that delivers leads. A lot of the time it's finger in the air, a little bit of testing everywhere, but nothing systemized. So we focus on creating that. We do it for growth stage B2B businesses. That means you have revenue. It means that you're looking for further investment and or looking at a private equity exit or getting investment from private equity, all the way up to an IPO. For seed and early stage businesses, we have a coaching function that follows the same process. So if you're interested in being taught how to do it, get in touch. What is a marketing unfair advantage? Well, in numbers terms, it means less risk and more money on the table, more money either coming in through investment or money coming in through revenue. Manu, who we work with, is one of our investor partners. He talks about the fact that the customer acquisition cost for Revolut was $1, whereas the competitors of Revolut, who are also raising money, such as Monzo, etc., had a far higher customer acquisition cost. Really simple, measurable result of them doing something different when it comes to their marketing and their customer acquisition process. And so this is a really lovely example. Our difference is that we look at both those areas. We look at the investor story and where the commercial needs of the business are, and then we also look at how growth can be achieved through marketing. And we look at it strategically, and then we come up with positioning, and then we work with partners for execution. We do that for some very large businesses and some slightly smaller ones. We've got experience in B2B and B2C in the corporate world, lots of investment work. We do positioning for venture funds themselves, who do their marketing positioning. We work with private equity businesses working with portfolios on their portfolios of businesses. And we work obviously direct with tech businesses. How it works briefly is what goes in is a lot of insight and strategic thinking and creative leaps and plans. And what comes out, we like to say that over a period of time, 12 to 18 months, what happens is a client gets a new swagger. And this is a phrase from our partner Square Dot. And you do the work, they embody the work, they do their brand, they do their website, they do creative. You don't have to do all of those things, but it helps. You've got a really clear creative focus. You've got lots of activity in market. Suddenly everybody goes, whoa, like you've had your Weetabix, what's happened here? And the client is suddenly more confident. They're winning more deals. And after over 12 to 18 months, they win their biggest deals. They get their best trade press. They get keynote speaker places in conferences. They get swagger, and then some of them get acquired at kind of silly multiples, hopefully. they feel like bigger fishes in their ponds. And that's the result of what we're talking about. It's not immediate. But if you don't do it, you're burning money on tactics. And it's for an engineering-minded founder, it's very attractive just to keep testing and keep testing. But you get to obviously what they will know as a local maxima, which is whereby you keep testing until you get to the mountain peak you can see immediately, but you don't know there's a bigger mountain behind you. And you get to that first mountain peak, and you don't quite have the wherewithal to kind of really take a step back and look to see where the other peaks might be. So we've got to test widely, and you have to have a point of view in the market to test, not just kind of tactical content and bits of boring content that's delivered every day. So how do you get that? We like to think of marketing like product development. Now, I've raised venture capital, I've done lots of digital product development, done lots of software. We understand the process of product development. Marketing is similar. You have an art and you have a science. Now, critically, what you'd like to think is that actually it's all measurable. Well, it's not. There's a huge human insight piece and human behavior piece, which is actually quite hard to put your finger on. There's a cultural piece. And just like product development, there's a design and user experience piece. So marketing is very similar to product development. We're using the same methodology, which is jobs to be done, to uncover the insights for our marketing. Great product design is inherently viral as well, but very little marketing is. Nobody cares. So how do you produce something that is memorable and can really inform a category, can really inspire and take a category forward? The other thing you want to do is ask the question of how can it be a win-win? So how can I inspire, but also how can I be a win-win? How can I make sure that the customer wins as well as the brand? So there's a bit of kind of philosophy there, which essentially says, how do you add value to the world through your marketing? And that's the way that you kind of get people interested in it. We see at least two major marketing problems every day. The first is that marketing is seen as a risk. This means that anybody who's spending money should be seeing on marketing should be seeing that as a risk to be mitigated, not oh, you've got to invest, but no, see it as a risk. What does that mean? Well, when it comes to venture capital, at least half of the metrics that investors use to determine if a business is worth investing in can be attributed to or are driven by customers or customer behavior through sales. So it's either customer action or customer behavior from a sales perspective. Now, are they paying money? Is the good unit economics, i.e., are you making enough money from every sale? Is your acquisition scalable? Do you have customers waiting? Do you have network effects because customers are talking? All of this is to do with the buyer and what the buyer is doing. This really useful ladder of proof from NFX is a really good template to look at for how companies could or should prioritize certain KPIs. What we see is that scalable acquisition, which means insights, testing, and knowing your user data, is a really critical point for investors. If you don't invest in these areas and mitigate this risk of these areas for investors, they will see that as a risk against your name when you're trying to raise money. So investors are just trying to de-risk their investment. These are the metrics they use to see if the business they're talking to is risky or not. Secondly, in private equity has shifted over the last 10, 15 years, and it's arguably much more about creating value than it has been in the past. Investors are still doing the kind of cost reduction and consolidation, but there's a new era of private equity investors who are seeking to build groups of businesses that collectively can add value, maybe to each other, but definitely utilize similar kind of pools of expertise. And they're looking at top line growth. as well as cost cutting and good margins. And then they may sell their business based on that top line growth to another private equity business. So you've got a similar mindset to the venture capital community of driving top line growth. How do you do that? Well, it's investment in marketing. Marketing is a massive risk because a lot of the money that goes into from private equity companies goes straight into marketing. So for any CMO of a private equity backed business, they know that marketing is seen as a massive risk. The second big problem is boring to boring. It's so extraordinarily tedious when you see B2B communications that are just a waste of, in the old days, ink, and now in the waste of pixels. What we find is that really dull advertising across any category fails to live up to the standards of really exciting advertising and communications. So the IPA, the Institute of Practitioners in Advertising, have got a very big database of IPA effectiveness case studies. So they do an awards every few years, and they look at longitudinal case studies of advertising. So, you're looking at your classic TV, print, radio, online, everything that constitutes a big campaign. They look at the effectiveness of that activity. It doesn't have to involve lots of media spend, but most of them do. In this example, B2B campaigns are 10% of those effectiveness case studies. So most effectiveness that is tracked and entered into these awards is B2C. However, across all of the activity, not just B2B, across all of the activity, they've been measuring the emotional outtake or takeout, if you like, of this communication. And they measure it by fame and emotional communications versus what they call rational and communications. And what you see is heavily rational are less compelling, less emotional. They drive less interaction. Heavily rational might be offers based or just features based. Those campaigns I'm calling boring, because what happens with those campaigns is they don't elicit any emotional reaction, and they win. It's not they're not effective, they're just a bit boring. They win, if they do win at all, they're in this database because they've won to a certain extent, because they spend more money. So if you think about the campaigns that really flood the market with cash but are not very inspiring, those are the ones that are kind of bludgeoning you into buying. And in this example, the data suggests that those that are more exciting or fame orientated, as in they become famous, and most of those are emotional, they perform 7 times better than the purely rational ones. And you'll see some more data on this in a minute. Likewise, if you look at it from a cash perspective, if you're wanting to save money, do stuff that is fame generating, because the fame campaigns will save you 15 million a year if you're spending money in media. Now, this is big money, big advertising, but what you get from this is very good data, because there's so many touch points, because there's so much data, money spent behind it. You get lots of data back from an effectiveness point of view. So these are some rules of thumb, and we'll go through a bunch more rules of thumb from this data later. So we recommend that you should find ways to become famous. We don't know the answer to how you become famous, but we'll have some hypotheses. Being famous, as in a state of being known or talked about by many people, hopefully for notable achievements, but possibly not, is a state where in the market, you're going to get many more people knowing you, liking you, and eventually, if you talk to them long enough, trusting you. So let's look at that. Most buyers are not in market. If they're not in market, then they're not thinking about you. They'll be thinking broadly about their problem. They may not have defined their problem yet. They might be at the stage of wanting to define their problem in order to solve the problem. Either way, they will have problems. If you can talk to them about their pain points, their problems, they can get to know you at the top of the funnel. As they get to know you and they come into the category and they go, maybe I do need an XYZ, then they'll have some familiarity with you and they can get to like you because they'll understand that you're in the space of the category. Over time, they'll get to appreciate your brand and who you are and what you stand for, and they may come to trust you. At the point of getting to know you, they just need to know, do these people solve my problem? So we're talking about problems. That's the critical thing. We're not talking about widgets and features and brands. We're talking about problems. So we'll explore that a little bit more. In order to become famous for a problem, you need to define the problem. And we'll talk about this in the context of newsworthiness in a second. Define the problem and talk about your value as essential, urgent, and surprising. Now, essential comes down to you've really, really understood a problem and that you solve a problem for a niche that can really highly value you. So essential is so much more useful than relevant or whatever. This is about, wow, if we don't have this, we will fail. We need to come up with messaging that delivers this. Urgent, we need this now. And if we can get this sense of kind of urgency and that you can solve their problem quickly and creating value quickly, you can shorten your buying journey. Most of the time when we're working with businesses, they have, say, 6-month buying journeys or 9-month buying journeys. And the question is absolutely in that sales cycle, how quickly can we get that sale? What do we have to do to reduce that sales cycle, that length of time to make the sale? A lot of companies just take a long time, and that's fine. But there's an urgency that can be introduced at each stage of the buying journey. It just takes a little bit of thinking. The last one is surprising. How can you be like, oh, wow, that's a completely different take. I didn't realize that that's how I should see things. Oh, right, you're seeing things from a completely different view. Or you found a route that's easier, quicker, cheaper. How do you reframe your offer to make it surprising? So we'll come on to some practical illustrations of this. News is most often essential, urgent, and surprising. Good or bad, it's essential, urgent, and surprising. To become newsworthy means to essentially frame a problem that it appeals to lots of people or has a massive impact on a bunch of people. Not everybody, but a bunch of people through culture, through business, economy. This is this is how you become newsworthy. It's how you work with journalists from a PR perspective. So we take this idea of newsworthy and we go, right, how are we going to tell the story of this problem that makes solving the problem essential, urgent, and surprising? How can we illustrate it when it comes to its impact on people, its culture, or the business or the economy? How can we become known for the problem, and how can we have a new view of the problem? When it comes to things like COVID or Brexit, then that's a relatively big news story. And what people will be looking for within that is niches. So the specific issue of Brexit for people who are from Europe who live here, for example. So then if somebody's creating a solution for those people, then they know that they can go into the slipstream of a big problem. So we're trying to get into the slipstream of a really big problem. What problem can we be part of that we can solve? So that's what we're trying to do. From a positioning perspective, there's a number of methods, and I want to share a bunch of methods with you. This is a summary, and then we'll go into the depths of those methods and talk about how clients use them in following webinars. But the first step is that we always start with insights. Now, insights are mostly misunderstood. When you're doing really good advertising, for example, you need a really powerful insight. And a really powerful insight makes you look at a category or look at a market or look at a buying situation differently. It has to be accurate, but it provides depth. It makes you go, oh, wow, what's that? Now, we look for insights in lots of different places. So when an insight hits you as a surprise, you make a note of it and you structure, you use it within the structure in a particular way. For example, we have a cybersecurity client. They were saying that the industry is losing its battle with hackers. Okay, wow, right, fine, that hits you first. Secondly, they were saying, and the reason for that is so many businesses are based on what they call predictable methodologies, mostly open source. And you're like, hold up, the whole cyber industry is based on open source predictable methods. So of course the hackers can circumvent those methods of security. So there's a bunch of insights in that, and you have to play with them and pull them apart. There's many, many more in this example, but I want to go on to kind of how we would find or use those kinds of insights. We would look at, broadly these, top 7, we're going to come up with a couple more later, but broadly these 7 primary areas for your insights. We're going to look at your story as a founding group or as a management team looking for growth. What is your vision? Where are you going? What's the commercial plans? What's your insights behind that? It's not just we want to double in sales. It's like we can double in sales because we've got this unique insight in the market. And if you don't have it, we help really explore kind of where it could come from. The second is, well, that's great, but what are customers really, really wanting? What's their major problem? And we call it the real problem because what happens is you get different degrees of problems that customers talk about. We'll go into that later. Always, there's alternatives and workarounds. This is not, a lot of the time, is not your competitors. An alternative or a workaround could be if you're using a piece of SaaS software or you're trying to sell a piece of SaaS software, but customers are using Excel instead, or they're using an intern. That's an alternative, and they're building workarounds instead of realizing there's a piece of software that solves the problem. So your vision, what customers are really wanting, what are the alternatives, what's the new thing? So we'll come on to this in a bit more detail, but the idea is becoming newsworthy. How do you invent or package or frame what you're doing as a new thing? And then lastly, you've got jobs, pains and gains, and we'll go into that in more detail. This is color-coded for a reason, because these all stack up into a little conveyor belt. So we end up looking out for these insights. We structure them. We look at the segments. We look at the marketplace, the product. We look at creating segment value propositions. We then pull it all together with positioning. Then we assemble them again in the go-to-market plan. And then they go into funnels by segment. And that goes into micro messaging across the buying journey. So the phases of positioning, go-to-market, and growth machine pan out through this process, and all these insights are used again and again. So the question we always start with clients, a conversation with clients, is about, well, what insight is their strategy, their growth strategy, or the current product, or their market approach? What is it based on? We always ask how. How do you actually offer a compelling value to your customers? What's in the meat of it? How do you know who actually wants it? How do you ensure that they can't get it anywhere else? What is distinct about it? Which products and services do your customers value the most? Who values those the most? How could we communicate this memorably? That's a strategic process of going from the value you're offering to the communications, and we always play with the detail beneath some of these assumptions, because they are assumptions, and we're in the business of hypothesis. We're in the business of saying, okay, here is a bunch of thoughts and we need to test it. The clients come to us with assumptions, we need to test them. So let's look at these types of insights that we listen out for. There's always at least 3 levels. Category level insights are those that are relatively generic. You get it from Gartner, you get it industry reports, you get it from experts. They go, right, the future of CRM is X, or the future of cybersecurity is Y. And you go, okay. Now, there won't be anything surprising there. What you do find, however, is gaps in the market, or where what you're doing differs to what the category is suggesting you should be doing. So for the category insights, we look at differences. For business level insights, which is always how do we make money or save money, we need to dig deeper and we need to look at, well, what is the business really trying to achieve? So for those insights, we're looking at the difference again between the vision, where they're going, and what the competitors are doing, and whether or not we can find ways of, by speaking to customers and doing qualitative research with customers, whether we can find a mismatch between what they think is going on and what they're buying, think they're buying, and what their own businesses are demanding. The third level is the buyer or the user. Now, these are personal motivations. These are decisions made by humans who are worried, sure, about the business objectives, and they're interested in where the category is going. But critically, they're not wanting to lose their jobs. They're wanting to get home on time. They're wanting to pay the mortgage. They're wanting to have some kudos and some fame in their day-to-day work, or and they want to retire at a certain age. So there's a bunch of factors that go into their decision making. So this is where often you get the really crunchy insights, the really interesting ones, the juicy stuff that you can work with. Now, over time, we find that in our methodologies, we combine all of these, and this is the clever bit. You're always, with any strategy, you start combining the marketplace with the buyer, with the product or the service. Now, what we tend to do is we look at not just what is being discussed, so what's the category suggesting, what's the product selling, but how the new thing works, how it is different to the market, how it answers the problems that the buyers have. And when we uncover the how, we tend to get into really interesting stuff. So if you take IT consulting companies, for example, the customers all want to reduce risk. Buying IT, whether it be cloud software or application development or Microsoft services, it's all inherently risky. Things can go offline, you can get hacked, you can be non-compliant. As the IT manager, it's pure risk. All they're doing is risk mitigation all day long. IT consulting companies come along and talk about digital transformation and future this and exciting, the future of sensors or robotics or whatever. And the IT manager's going, I just want this thing not to fail. So the work with IT consulting companies is to understand how they mitigate risk. And most of them don't know how they do that. But once you can get to the bottom of that, you can then help with positioning. So the net of all of that is what we call a provocative point of view, which we'll come to, which is how we frame all of the clever stuff that the business is and what it stands for. So if you break these down a little bit, for the market opportunity, it's about finding new space. It's about understanding the strengths and weaknesses of competitors and positioning their strengths as weaknesses, and knowing where your true value lies, maybe in a niche or a subcategory. There's a process called category design that has a use, has a value at some point, but you can't just go and invent a new category unless you've got a number of other parameters in place. So we look at understanding the category from the point of view of the buyers. The second area is the buyer's real problem, and this is the jobs to be done framework. Now, jobs to be done is something that's been around in software development since I think about the 80s. It was Clayton Christensen that came up with that, working with a number of clients, including McDonald's. They understood that people hire products to get jobs done. So a job is something that they're OKR'd on, they're reviewed on, they have to get it done. So a head of data, for example, would be their job. We're working with a client recently. Their job is not just to ensure the data is used in the business, but it's to make sure that everybody knows how to use the data in the business, and the data is a certain quality that everyone can use the data in the business. There's a number of jobs in there that they need to get done. They need to make sure their team is aligned. They need to make sure the tools are being used in the right way. So this is beyond just the headline category stuff and into that user insight piece that we talked about. They always have pains and gains. They're trying to achieve things. They're trying to remove or trying to achieve some kind of benefit. They're trying to remove some kind of pain. And they're always exploring alternatives. Do they do a workaround when it comes to using Excel? Do they use interns? What are the alternatives? How can they make do without spending money? What is achieved or created out of this, if you like, is a job card. Now, a job card is a really simple summary, and it's for each persona. And we'll always do lots of stakeholder interviews. and we always understand the buying journey. And this job card takes those insights and structures it in a very usable way to create personas. The third area is the idea of the new thing. Now, this is itself a workshop, and you go into depth and you talk with the product development, product teams about. But we've found it goes across 4 categories: tech, design, experience, and the core insight. And the idea is that every product comes with core beliefs, assumptions, and insights. Either the PhD who founded the business had an insight during their doctorate, and they went, "Oh wow, the answer to cybersecurity problems is all X," or over time they've come to realize they're really good at something for somebody, and that's an insight around the experience. Or they've really discovered how to crack design, and it's all about the user insights they've got and the behaviors that they're trying to achieve with users. Insights can sit across everywhere, but then they'll make decisions across these categories as well. They'll make decisions about how to design something and how to create an experience based on those insights. So we uncover this, and this takes a bit of time, and it's quite subtle, but it's important. What comes to the end of all of this, or is combined, how we combine all of this, is you have a value proposition statement, where again you can see the color coding, whereby you're taking the insights and you're structuring that in a very, very simple way. And we can go into this in a lot more detail in our coaching process. But this allows us to then take value propositions for each persona, and then we take the same insight and we put it across a very simple market positioning statement. We take the same insights and we build a provocative point of view. Now, a provocative point of view is something that should arrest. You should be surprised. So remember, we talked about urgent, talked about surprising, for example, and we talked about essential before. So we want messages that are provocative. Now, to provoke is to stimulate or give rise to a reaction or an emotion, typically a strong reaction or emotion in someone. We cannot have apathy. The biggest danger of any communication, or the threat to any communication, is that nothing happens. You can't bore someone into buying, as David Ogilvy apparently said. It's definitely attributed to him. You know it's going to be boring if you don't have insights in it. No one fundamentally cares about you anyway. So the big question is, how can you understand the buyer to such an extent that you can help reframe their point of view about a product or category? So there's some examples of this, and some are more provocative than others. Some are very provocative to their buyer, but they're kind of seemingly less provocative to the less initiated. So I just want to kind of zip through some examples, then we'll go into some fundamentals for scaling marketing. So the first is, we work with a business called Cipres. It does they're called deal data, which is they have information about private market investments that their venture capital companies and other groups are making. Most of the data is bad quality in the market. They have the best quality data because they get it directly from those people making those investments, and they sell it to people who want to invest in private markets. Our point of view, provocative point of view, is that essentially if you don't have Cipres, you don't know, because the data is so bad. We can therefore take that to the next level and say those without Cipres are guessing. And suddenly in the market of really analytical and quant kind of data, and it's all very detailed, suddenly you're creating a division between those that have and those that don't have. And you're saying, actually, those people that don't have are guessing. Highly provocative point of view, beginning to be explored with the client and rolled out. But as a concept, it's the right frame to really cut through within the market. This is a quantum computing venture fund. Their observation was that they have brilliant quantum computing scientists, and most of the time they haven't been supported to be successful from the universities and other places that they've been working, and that they've needed to have a completely different approach to business support. So we're calling that breakthrough business support. Business support is breakthrough as our scientists, And then obviously that's fine as a statement of a what, but then they have to really go into the how. How is it breakthrough? How is it different? But at least in positioning itself as breakthrough, they're in a completely different state because they have to live up to that really provocative promise that makes go, okay, really? Okay, how is it breakthrough? And suddenly you're into the how, and that's how people buy. Another example, Blue Horizon is a venture capital business, and they are building a whole platform for alternative proteins, which is your, alternative chicken, alternative beef, alternative eggs, etc. So the mission we work with them on is that they're trying to accelerate the world's transition to a sustainable food system that delivers outstanding returns for investors and the planet. Okay, what is a sustainable food system? Immediately that provokes a level of confusion, essentially. Well, what is that? And you're into the how. So essentially you've got a what that poses a question. So then you will automatically be able to answer that question with how. And that's how people buy. They buy on how. More Happy is a coaching platform that delivers really affordable coaches because these coaches already qualified are busy trying to get further qualifications in various specialisms. So they then can give those coaches through the platform at very, very low prices. The provocative point of view here is that actually More Happy believes that everyone in the UK should be able to have a coach if they want one, not just the elite, because previously coaching has been for the most successful people already. And therefore they believe in a thought which is coaching for everyone. And as soon as you go into coaching for everyone, you've taken something that's very elite and you've said it's absolutely mass. And no one else is talking about coaching for everyone. So what does that mean? Okay, how does that work? Well, we work with small businesses, we work with charities. This is how the platform works. And it's like a completely different perspective to an industry that's relatively established already in providing coaches at a very high cost. Cybersecurity, we talked about this before. The idea that hackers are winning because the methods used by the industry are predictable. Being told you're predictable is a real slur. Recon have got something called event signals, which allow them to be very unpredictable, and it works better. So suddenly you've got an idea of being able to position the whole market as predictable and therefore wrong, and their unpredictability and therefore more effective story becomes a lot clearer. And that allows you to be newsworthy because you can create a vision of the market as failing, and it's failing based on their own laziness, their own use of open source systems. So those kinds of positionings just start a real energy in a certain direction, calling competitors predictable the whole time, saying that coaching is elite and we're for the masses. These are simple thoughts that allow for energy to be created. So that's the positioning phase. If you have this simple thought, you can then start going, okay, well, yeah, I could see how content could be created for that. Or I could see how we could do really cool stuff in events. I could see how we could be creative in our PR. So there are some principles here for how to be effective. And a lot of this comes from the data mine that we discussed earlier. Trigger emotions drives medium and long-term profit. What happens is if you're rational, you can get some short uplifts. You can go, here's an offer, here's a feature, come and get it. But what you find is actually a combined story of emotions and like the emotional piece of everybody else is predictable, we're unpredictable. It's absolute criminal that people are being so predictable because hackers are able to do what they want. That's emotionally charged. So you do that emotionally charged messaging with a sense of, and this is how we do it, rational. We're unpredictable, we've got some secret methods, and we're 5x more effective. Combining them in the short term is very, very sensible because it gets the message across in its entirety, the know, the like, and the trust. Right, I get you. However, if you have too much weight on rational, or if you're not dialing up the emotion enough over a longer period, people start forgetting about you. It's very important to keep reiterating the emotional impact. So over the time, over several years, you can see here that it starts really growing. the impact really grows. Now, it therefore makes sense that you're going to need to split it somehow. And in B2B, broadly, there's a kind of, and in B2C, it's more so, more pronounced. But if you just take a kind of a 60-40 split, you wouldn't be all that wrong. In this instance, for the emotional messaging, you need to have perhaps closer to the 40%. You need to keep that emotional story going for B2B. For B2B, the rational piece is slightly more important, but it's not crazy more important. It's not like 70% or 80%. So if you, rule of thumb, always have that emotional story going. It's about the problem that we talked about. It's the newsworthy human interest problem piece. But just make sure you've got enough rational stuff going at the same time. Perhaps 55-60% of your communications are towards the bottom of the funnel, the medium, the like and trust phase. For out of market customers, like we discussed, the 95% of people who are not in the market, you need to be surprising and emotional. You need to talk about the problem. For those that are in market, after the know, the like and trust phase, then obviously be as useful as you can possibly be with how you're going to help customers solve the problem. It differs for B2B and B2C. B2C is a lot more emotionally charged. Fame campaigns create the most impact. Generally, humans take mental shortcuts, and we like companies we've heard of. So of course you can use account-based marketing methods to surround your prospects, and they would have heard of you because you've been surrounding them. But you need to also be in other places. So when they do look, you pop up in lots of places that they've kind of corroborated their instinct by looking at the market. They've looked at talked to other customers. They've looked at industry reports. You pop up there too. So nothing quite beats general fame. Over time, you're looking for quite a few interactions. Now, this is some actual data from some clients. The B2B, on average, needs more interactions, 7 on average versus, say, 4. But what you see is it's really split. So you can get kind of some of the routes to sales, and this is GA4 data. Some of the journeys to sale are attributed to sale anyway. You know, they've had 20 interactions, others 1 or 5. So when it comes to B2B, just you know that you're going to need to have more interactions over time. And what are you going to do with them? Well, know, like, and trust. You're going to need to build that goodwill. And if you've got 20 odd interactions, then you're going to be offering value and helping them make purchase decisions in an interesting way, not in a boring way, as much as you possibly can. So this is just some rules of thumb regarding how much interaction should be around giving value and helping people versus making offers. So the sum of this is that trust can be engineered. And this is some work from Cialdini, who's a psychologist around persuasion. And he also wrote a book called Persuasion. See what he did there? The point is that he's really into the psychological impact of selling. And what he's saying you need to do, and this is from a lot of the psychology of persuasion, is that you need to, in order to build up the know and the like phase, I guess, and also then into trust, you need to ensure that you're consistent. You're consistently talking about the same thing. You are reliable in that respect. You need to talk about, oh, you know, you are for us. You know, we are the same kind of groups of people, and we can help each other. That leads into obviously relationships, and you have lots of contact over time for relationships. Help without expectation. There's loads of studies about reciprocity, where people want to give back and want to be part of it because you've helped them, however subconscious. And over time, you're becoming an authority. And really, it's about these 3 things. It's the message you're delivering, the medium you're delivering it in, and obviously the messenger, who you are. So if you can get into a place where you're building authority, in mainstream publications, for example, and you're seen as a leader, that's obviously your ideal. How do you do that? Well, you have to be interesting in the first place. You have to have a different point of view, and that point of view has to be based on insights, not just industry jargon. So you can see how it ladders up all the way through to the psychology that Cialdini kind of suggests and has been well proven. As you pull all of these elements together, you'll build your plan. And there's a very simple structure to most plans. You have this funnel, know, like, and trust, which is broadly attracting you at the beginning. Oh, I do know you. I'm engaging. Oh, I'm getting to like you, and trusting you. Delight is the third phase, whereby you're trying to create some viral reach. There's always some tactics in there, but these will change, and they will change depending on the category and the product, etc., etc. My point is that there's always a stage where you have to launch what you do. So in this instance, you've got a launching phase, where you do need some cut through content and some thought leadership, and for that you need insights. So it comes back to the need for something interesting to talk about. There's a nice process which is used in category design where people kind of say, well, actually, make sure that you really understand the problem. And we talked about becoming newsworthy and the need for understanding the problem, and then turn the competitor strengths into weaknesses and evangelize at the same time the new thing, the new future. And then you can bring that to life. So there's some thinking here that you can see. These are in this establishing yourself in the category. These are the principal steps you need to take in order to establish your problem. Most companies resist or are worried about continually talking about the user's problem. They're so quick to talk about themselves. But we all know that the more you talk about someone else, the more you gain their trust. The more you listen to what they need, the more you gain their trust. The less talking about yourself you do, potentially the less trust you can deliver, which is ironic in a webinar. But the point being is, the idea is that you listen to the prospects. And what you then do is make sure that the problem that you're reflecting back to them is validated with them. If you take our example with More Happy, we had this thing about the problem, which is coaching shouldn't be for the elite. We knew that other platforms were expensive and for the elite. Then we needed to establish a new thing, which was, wow, imagine if everybody had a coach. You could have a massive increase in productivity, because productivity increases when you've got a coach. Or you could have a massive increase in self-confidence, and what that would mean for the nation's mental health. This is a big story. So then you kind of go, well, let's help everybody. Let's provide lots of academic reports and studies around that opportunity, in our content. Let's get people to associate coaching with problems they have. Let's make sure that small businesses have got coaches available, or that they can be thinking like coaches. So they understand and have empathy for what a coach is. There's a ton of stuff you can be doing. The point is, it all stems out of knowing about having knowing that there's a problem and that you're there to help solve a problem. All of that then goes into funnel design, and you can see here that we're creating multiple interactions across channels and over months. So with this kind of funnel design, you've got evergreen activity, you've got campaign, time-based activity in the attract phase, you've got activity going to a website, landing pages, playbooks, etc. You're gathering marketing qualified leads, sales qualified leads, etc. You're using the insights, the pains, gains, jobs to be done, in creating content, and you're creating content that delivers on those jobs, pains, and gains. All of the same insights are used in the same way here. Let me just come back over here. You're delivering messaging across the funnel. Again, at the top of the funnel, when I'm aware and I'm asking questions, what's possible? You're worried about the current state. You're worried about your own problem. You've got a problem where you want to transform you from the pain to the gain that comes from the value proposition. And we might have a strategy and a message for you at that point. As you go through your the funnel, you're wondering, well, how does this work? How could it work? Well, we understand the jobs you're trying to do. This is our new thing, and this is how it works. You're trying to compare and shortlist vendors as you're getting to know, like, and trust the company. Well, how does your approach work versus other people's approaches? Well, we know the jobs you want to get done. This is how it works, and these are the benefits. And then you're into, well, why you, basically? Why should I trust you? We know your pains. We know what you're trying to avoid. We know your gains and what you're trying to seek. This is the green. So therefore, this is what we're going to tell you. So we can really, really be formulaic in taking insights and delivering very, very, very specific messaging at each stage of the buying journey. That's all well and good, but how do you deliver it? And you don't want to just have strategy. Strategy is useless without execution. It's all about testing. So this is a methodology for testing ideas. You always have an audit of where are you now in what you're delivering. You know, how good are you at doing the messaging you're doing? We then have some hypotheses around how we could deliver growth. We then have these interaction or engagement points, and we need about 20 of them. We're then going to run tests on each of them, and we're going to update our hypothesis and update our thinking based on those tests. So that's your lean loop. That's your pretty standard methodology for testing. What's particularly useful with our partner GrowthFox is the audit of how ready you are for growth. Most businesses, many businesses, are not ready. There is a technical and engineering and a plumbing, as I call it, requirement in order to deliver marketing in lots of different places. And you can see here it goes across lots of areas from search to social to advertising. Most of it is data driven. All of this activity is engineering, it's growth engineering. So you need to audit how successful you are currently and where you could be going. And then over a period of weeks, we go through those phases, and there's lots of activity and workshops and tools and blah, blah. The point is, through these phases, we go from where are we now to, okay, we're finding out what works, what could we do next? And that's a very systemized process. Now, it has to be systemized because there's a massive chasm between people going, yes, I know the process, to actually doing it every day and every week. And it takes a long time to get your head around the ways of working to make this successful. And it's not easy, but there are ways of doing it. And we're trying to structure it more and more and more so that you can just go, boom, this will just works. We're getting to the place where this growth machine just works. So the phases are every 3 months, you have a strategy review. Then every month, content is created. And this can be created relatively straightforwardly because as an expert in your category or as an expert in your business, you can download what's in your head and you can write a couple of pages on a certain question. Then that, or a webinar, or create a webinar like this. This webinar, for example, is going to get cut up into like 30 or 40 different posts and 30 or 40 different places. So you do it once. This has taken me, for example, an hour. You do this once to deliver, and then it gets used for a month. And then it's always evident on your website. But importantly, this content is used in lots of different places. So it's not as painful as it seems. You have weekly tasks. Those weekly tasks go into understanding what you're doing for channels, what you're doing by content, what you're going to be doing for each funnel stage. Those are your tests. And then the insights of that obviously go back to your 3 monthly review or monthly review, depending on cadence. So that's your ideal scenario. To make that happen, there are tasks and Kanban boards and whatever. All of these tasks and calendar events and things have to occur, and you have to be disciplined, which means you need to have a team that you are happy to call upon for content. So you might be a sole marketer of a B2B business, and you'll be thinking, oh, how can I manage all this? Well, as the sole marketer, you can make sure that you've got some experts thinking 6 months ahead, delivering, a webinar each. If you have 6 experts, for example, or 6 members of the team, each delivering a webinar, and I said each of those webinars can be cut up into a whole month's worth of content, then actually there's not so much outside involvement needed. But the critical thing is to work really tightly with the delivery expert like GrowthFox to make sure it's on target. You can be expecting certain types of conversion based on 2 major factors. One, whether or not you have a community already. Now, your conversion rate at the top of the funnel or engagement rate at the top of the funnel will be far higher if you have built or are building a community. If you're having to pay, it's expensive and it's low conversion. Now, the lead capture activity is at the bottom of the funnel. And again, if you've got the community, people are warmer to you. So there's a few bits of insight here about how useful it is to be starting to build your own presence. But again, this can be part of the growth machine anyway. So this is a critical part to building community over time. Okay, so that was a bit of a whistle-stop hour. I covered broadly the need for insights. We talked about how to structure and find insights and how that informs messaging. You saw how that goes into the buying funnel. We talked about the need for fame and emotion. And we talked about consistency over time and quality interactions over time. And then we talked a bit about testing and some of the growth machine activities around testing. Okay, now there's a few questions that I want to answer. This is the first of 6 webinars on this subject. Next time, we're going to go into much more detail on some of the core elements. So please continue and come back and we'll talk about how it's packaged up. If you want to engage, myself or Fergus, my colleague, is here. We work very quickly and we don't work with lots of people. We're a very, very small team. So we can handle, say, 3 or 4 clients a month max, and we can get through positioning for each within about 8 weeks. So it's really important if you do want to get going. We have a few slots. We always have a few slots. That's why we're doing these kind of webinars. And it would take about 8 weeks to go through the first phase. Okay, so there's a few questions that have come out of previous webinars and a few comments on LinkedIn and things that we want to talk about. So we offer coaching for businesses that are early stage or earlier stage. And these webinar series is going to be a training for businesses who want to do this internally. Obviously, we're selling our wares to say it's useful to have an objective third party. You can do this internally, and the 6 webinars will go through the details. The challenge is objectivity. And when you're close to a business and you're in the jargon, it's difficult to step out. Obviously, third-party partners like ourselves provide category knowledge and understanding from a distance as well. So the two things together. You want to be able to cut through the BS essentially, and we coach CMOs on the process for them to do that, to be able to cut through the BS. But it's important that they are critical thinkers. So just get in touch. We'll talk about how easy or otherwise it could be for you as an individual to do this. The second question about cost. So because this is a growth stage, you're looking at anything from 25, 30 upwards, up to 60, 70, 80,000, depending on the investment and the number of stakeholders we're interviewing at the time, and so that's your kind of your rough ballpark, depending on the size and how much stakeholder interviews how many stakeholder interviews we do. And then you're looking at around the 15K or so for a monthly execution of the growth machine, give or take. It'll be flexible. How do I get buy-in across the team? So a massive part of this is about alignment. Alignment of teams on a certain direction, alignment of teams on the vision of the business, alignment of teams on the insights that we've gathered, and agreement on that they are relevant insights and they could be crafted into provocative statements, and then alignment of teams on messaging. We've got lots of experience of taking different characters and making sure those characters are on board over time. We haven't failed. So if you're worried that, oh, so-and-so in sales won't be a fan, or so-and-so in product is going to be worried about this and might be a blocker, let's have a conversation. There are magical ways through. Now, will you guarantee it will work? What we've generally found, and this is the swagger idea, is that when you do this and actually execute, it always works. You have to develop the discipline to execute. And that means doing the tests or allowing the growth partners to do the tests. And it also means sticking to the insights that we've got. The biggest sadness is when you do all this work and then it is left, in a file, or it hasn't been communicated through the whole business. So we do a lot of work to try to make sure the whole business is really bought into it. So when it's committed to it, it always works, because you're building a testing methodology within the business. So you always discover answers and you have validated insights. So we've already de-risked the process by having really good validated insights in a very structured way. So the question is always, how can you execute? And you can execute by instructing a third party to go through the process in a very structured way, and being there for sign off, and being there for the meetings, and being there with energy to want to make it work. Okay, so I think that's all the questions. That's all I had. Yep. So thank you. And we've covered a huge range, and we will come back again with some more detail on the next phases. So how to use these principles in a very structured way for yourselves, for your teams, and I hope it's going to be useful. Okay, I'll see you next time. Thank you.